Hi, this is Benoy, your host of the Solar Maverick Podcast. This episode of the Solar Maverick Podcast is brought to you by our sponsor, AMS Renewable Energy. AMS is a top-tier solar EPC that operates within the precision and mindset of a commercial general contractor. Headquartered in White Plains, New York, and licensed nationwide, AMS has over 30 years of construction experience, tackling even the most complex solar projects with unmatched expertise and craftsmanship. Whether it's a challenging commercial industrial rooftop, ground mount, or full turnkey solution, AMS is committed to best-in-class service and results that last. If you're looking for a solar EPC partner who understands construction inside and out, AMS Renewable Energy should be at the top of your list. Learn more at amsepc.com and tell them the Solar Maverick sent you. Now let's get into the episode.
Before we started recording and I've been very vocal about this on LinkedIn, let's take renewables out of the equation. The reality is that solar over the last 5 years is well more than over half. In fact, it's been mostly over 66% of the new capacity on the grid. So in a time where demand is growing for power, by ratcheting back renewables, what are you planning to replace it with? That's the question that we need to be asking each other, because sure, there were some favorable things in the bill for nuclear, but it takes, 10 years minimum to get nuclear online?
Hello and welcome to the Solar Maverick Podcast, where solar meets entrepreneurship and experience. I'm your host, Benoy Thanjan, so let's get into it.
Hi, this is Benoy, your host of the Solar Maverick Podcast. I'm really excited to have Nate Jovanelly, who's co-hosted many podcasts with me. He's the founder and CEO of SunRaise Capital, and it's August 11, 2025. There's obviously so much that has happened in the solar industry this year, and I'm excited to have him talk about specifically. We're going to focus on the residential solar market, the big, obviously beautiful bill, passed, and we're waiting for some guidance on the safe harboring and fiat. Nate, it's always great to have you on the podcast. Thank you for making time. I know it's a busy time for all of us.
It's always great to be on, Benoy.
Yeah, definitely. Nate, if our audience is not familiar, it would be great if you could tell them, what you're doing at SunRaise, and also maybe even too, like your prior background and how you got to where you are.
Sure. I mean, super high level. I've been in solar for well over a decade. I think it's been closer to 15 years. I started and ran a TPO company that was a subsidiary of one of the largest retail energy providers in the US. Did that for about a decade, a little under. Have a lot of experience in software, and that led me to start SunRaise Capital and SunRaise Technology, which is a subsidiary of SunRaise Capital. And I think the easiest way to describe it for those listening who don't have any familiarity with solar, if say Sunnova, who's no longer around, but Sunnova's a residential lease company, if they were a Hilton, we're sort of an Airbnb, asset light. We do all the same technology to make sure that the assets, you can underwrite the assets, they're investment grade, and we have the ability to do credit and all this other custom tech to really deploy solar finance products in general. Our specialty is really leasing. And the reason why we built the platform is that so anybody with a tax appetite, tax liability can invest in solar, because it's a great asset class with really strong tax benefits, and which I'm sure we'll be talking a lot about today, and long-term revenue generation.
Yeah, definitely. I really appreciate you explaining, Nate. And we're actually a few weeks from RE Plus as well, Las Vegas, which is like one of the largest renewable energy conferences, I think, in the world. Actually, Abby Hopper from SIA was telling me. And I think we're both excited to go to the conference because just so much has happened within the industry in a very short time. And obviously, meeting with different colleagues. Nate, obviously, I don't know if you want to talk about like how has the residential solar sector been impacted by the big beautiful bill that was signed on July 4th. I know you have a question for me. I don't know how we want to start that as well.
Yeah, no, I mean, we could start there and work into it. I think there's a lot obviously going on in solar. It should be a very interesting RE plus. I don't mean bad interesting, just interesting. I mean, we've talked about on other podcast episodes, we transitioned from SPI to RE plus. Then it seemed like there's more batteries than anything. And it's just been fun watching the conference grow over the past, decade plus. And in this one, I don't think there's going to be a lack of enthusiasm. I mean, the one that was right after the IRA passed was obviously it was a different sort of energy. So it's going to be interesting to compare and contrast with this one in light of the big, beautiful bill. Obviously, it's going to have some negative impacts on solar. I think long term, as everything, the market will figure itself out, and kind of dovetails into the question I was going to start with by asking you. But before we get there, just high level brushstroke. I think most people are aware that are in the industry at this point that Section 25D is removed from the tax code. So that gives individual homeowners the ability to take the 30% federal investment tax credit. They were never entitled to any of the bonus credits, of which there are 3, each for 10%. So that nothing really affected there. But I think this is going to be really difficult for loan providers to navigate in the near term. The Section 48 tax credit, which applies to third-party ownership or leasing, which you can kind of use interchangeably. Third-party ownership, also often referred to as TPO. Those credits are good through 2027 with some caveats for what we refer to as FIAC, or foreign entities of concern. And also there's a lot to be worked out with regards to safe harbor. So safe harbor, for those unfamiliar, if you purchase generally 5% or a certain percentage of the equipment in a certain tax year, and you use that equipment because you've commenced construction, there's a bunch of nuances here, but basically you could buy equipment today to preserve the tax credit today, even as the tax credit steps down. So leases should be good for a little bit. Again, there's still some uncertainty that we have to navigate with FIAC, and that's simply saying that if a certain percentage of the material or the company is controlled by China or Chinese entity, then you might not qualify for the tax credit. Still waiting for some guidance from Treasury on that. But what I think is interesting, and I was very vocal about this, and I've been wrong on this podcast a lot. I think that's why you have me on. But in all seriousness, it is very fluid, right? And we've talked about, before the BBB was even a thing, there was a lot of Republican support for solar. I do think it's generally bipartisan. Unfortunately, sometimes party politics come into play, as with all things. But a lot of the manufacturing and or domestic content, which is another bonus credit of 10% federal investment tax credit. And we're seeing a lot of that in Republican districts. I know for a fact, we talked about this in the last podcast, because the amount of money invested in manufacturing is staggering. So I was pretty confident that the tax credits would survive. And technically they did. I don't know it's the best outcome, but I think it's worse than what I would have anticipated. What my crystal ball was saying, especially because Trump did extend the tax credit in his first term. So, and again, I know we've deep dived this on the last podcast. I'm not going to go back around, but ultimately, I think everyone in the industry expected eventually the subsidies to go away. And I hate even using the word subsidy, because it implies that other energy forms don't get the same subsidies. And I think theirs are even greater, honestly. And there's tons of data on that, so people can go do their own research there. But just generically speaking, I think the issue is more with the suddenness of the change. I think, a gradual step down is generally what's expected. And just having the tax credit sort of abruptly expire for homeowners, I think, is interesting. Leases will continue to gain market share, certainly, definitely in residential solar. But I think the question I had, and again, this is all that to set the stage for the current administration, is very pro, obviously, not that the other one's not, but you know what I mean? Like, to manufacture here, to lower the cost of energy was a stated agenda item. And I think what the BBB is doing is effectively undermining the amount of energy that's going to be required to continue to, grow this great nation. Because if you look at the demands on the grid, like FPL, I just saw another news article the other day, Florida Power and Light here. I'm based in Florida. They're still pushing for what is going to be the greatest rate increase in US history. And I posted an article on LinkedIn, I think it was last week, about same with Pennsylvania. Pennsylvania is having really high energy price fluctuations because all the data centers, and there's just not enough power. And what we were talking about before we started recording is, and I've been very vocal about this on LinkedIn, let's take renewables out of the equation. Like, let's take it off the equation. The reality is that solar over the last 5 years is well more than over half. In fact, it's been mostly over 66% of the new capacity on the grid. So, in a time where demand is growing for power, by ratcheting back renewables, what are you planning to replace it with? That's the question that we need to be asking each other, because sure, there were some favorable things in the bill for nuclear, but it takes what, 10 years minimum to get nuclear online. And by the way, hate to say it, when you go to site that nuclear project, good luck, right? If they started building one in your backyard, I think your neighbors are all going to have a lot to say about it because people just don't want it. If you're talking about gas, I'm not, a proclaimed expert in peaker plants, but everyone is telling me that you're looking at a minimum of 6 years just to get some of the turbines. And they're all on back order. Half of those apparently come from China, is what I'm told. Again, it's not my area of expertise. But when I'm looking at this and I'm looking at the amount of renewables, and that doesn't include wind in this case, there were times where there were months where it was 100% of all new generation was coming from wind and solar in the US. So if those cut in half, you're cutting your new generation in half. How in the world are we going to keep up with demand? And I don't think we can. And as a result, you're going to continue to see skyrocketing. I think that word is fair to use in this case, energy prices, especially at the consumer level. I can dissect that a little bit more later, but I'm just wondering, in your opinion, I mean, are you seeing the same thing? Do you have any other technologies that you think can come in and fill that gap? Or where do you think we're heading generally as a society when it comes to the electrification of the grid?
I mean, as the CEO of Nextera said,
Yeah.
solar is going to be the transition fuel to natural gas and modular
Are
nuclear.
you on my LinkedIn? I posted that.
Oh, you did post that.
I did post that one. I loved it because of where the
Laughing about
source
this.
was.
But I think you're right. Like prices are going to go up a lot, and we are unfortunately not strategically. We're going to need energy from every energy source, and the executive branch of the US government is not thinking strategically in the sense of, solar is the fastest form of generation to come online. As you said, like natural gas. I know they've talked about clean coal, modular nuclear and nuclear plants, but that's like 5, 7, 10 years down the road. So, I still think it's going to be solar. I think you are going to see like an increase in electricity prices. You are going to see obviously issues with like blackouts because of our transmission distribution system is extremely aged and needs upgrades. And obviously, distributed energy helps with fixing that because it puts less of a load on the grid. I think what we're going to see is like utilities, energy companies, individual states, municipalities coming up with basically innovative ways of coming up with new generation to come online and expediting things maybe faster than before because we need that generation. But I think at the end of the day, like it's gonna hamstring obviously corporates, right? Like your large tech companies, Meta came out with it. They need like a data center as big as Manhattan. They're gonna pressure that they need energy for it, right? And obviously economical cost of energy. So it's gonna be interesting to see how this all works. And I think, I've talked to some investors too, and they're like, for the larger projects, we don't necessarily need the ITC. Buy the panels from China, even with tariffs, it still is more economical because if you think about all the costs related to structuring the transactions, especially your big like utility scale sort of projects. So we'll see. It'll be interesting. I think like everyone's trying to process what's happening. Unfortunately, I don't think energy is obviously so important, right, for the competitive advantage, especially when you're talking about this AI revolution. And it doesn't seem like executive branch is actually thinking strategically about what's the best. And obviously, going back to your point, like all energy in the US is subsidized. People believe this fake news that only solar and wind are the only ones are subsidized. All energy assets are subsidized in the US. I think the other thing too is like obviously these are political decisions, not well what's best for the country. The oil and gas industry raised $1 billion for, the Trump election. And so obviously he's going to look out for their best interest.
Yeah, I mean, and you mentioned we were talking about this before too. I think it's important to note, and I haven't done the research to fact check it, but I would assume it's accurate because of the source. And you had mentioned Abby earlier, and she's the president of the Solar Energy Industry Association. She had posted something a couple weeks ago. It was really interesting, just kind of about my point. Like the amount of new generation coming online is from solar is staggering in the US. And we're cutting that off when China's ramping it up. And if you look at the inflection point where we used to have double the electric capacity on the grid as China, and I think now they're double. We just talked about it. I don't remember the exact statistic, but it's something to that order of magnitude. And it's projected just to keep the gap getting wider and wider. Obviously, they didn't have the same environmental policies as us. So they have other generation coming online too. That's not just solar, a lot of coal and other things. But in our current regulatory environment, I don't know we're going to be able to keep up with that. And that's super concerning beyond just the cost of power. To your point, though, I think what's interesting with solar is, in particular, let's stick with resi at the moment. I think commercials be a little bit more challenging, but for residential, the cost of power is so high right now in most states that there's still going to be savings without the federal investment tax credit. And the other thing that we didn't mention in the bill, just I think we should bring up is 100% bonus depreciation came back. And I'm sure that wasn't just for solar, so people can go right off their jet, but the benefit of that obviously does extend to solar, at least at this point. I think it'd be hard to carve that out, but who knows? So it actually made the economics in the short run for third-party ownership better. And I think even post the sunset of the federal investment tax credit, if you have 100% bonus depreciation, there's still a nice tax benefit there to own solar and to have these models. But at the end of the day, you're competing against the grid. And as long as energy prices are increasing at the rate they're increasing, there's just going to be more and more room for solar. I do think in residential, the customer acquisition cost is the most expensive component of the job still. And that will continue to come down as we have more and more adoption of solar in the US. Think like California, where energy prices are more than double any other state, way more than double. They're also into the early majority in terms of solar adoption. I mean, every new home in California has to have solar on it. And I think those policies will extend to other states as people start to feel the pain from the higher energy prices. So that gap there, I do think you can sunset the ITC and residential solar. I think the most recent post on LinkedIn, again, a lot of this is on LinkedIn. So if you want to follow me, go for it. I try and only post relevant things. It's usually once a week or so, but I just posted an article about, it's going to be a lot of short-term pain in solar, but there's going to be a lot of long-term growth potential because this power is going to have to come from somewhere. The gap's going to keep widening, more savings for customers. Customers are getting more astute. I think long-term residential solar will be fine. I don't have as clear a picture on commercial. It's also not, I do some commercial work, as you know, it's just not my area of focus. I think generally their rates are a little lower. It's not going to be like that forever. Like I said, they're going up and eventually they'll hit the tipping point. But there are a lot of states where even without the tax credit, solar makes a ton of sense. And as you said, you're using solar at the point it's being generated. So you don't have the distribution losses and other things associated, which I think is one of the main components and one of the things I like most about it. The other things we're seeing, and we've talked about this forever, is at least it feels like forever. In solar, it feels like forever. I touched on earlier, like the first made it RE plus and his batteries are going to take over. And it's going to be all batteries. And I feel like the uptick's been slower than I expected, but now it's like, I don't think it has anything to do with the bill. Maybe somebody has a really good explanation and I'm being dense here, but in our platform, we're seeing just an explosion of battery attachment. We went from like less than 5% to over 20% overnight. And that's total. So that means our real percentage of what we're doing right now is over 50%. So it's just keep pulling that average up. And we're seeing more and more higher and higher battery attachment rates. I think it kind of goes back to what you're saying. I think people want the independence and they see what's coming down the pike here. It's one thing to get to lower your energy bill, but here in Florida, we have hurricanes, and I can tell you the line for generators when there's a hurricane coming into town, is out the door at Home Depot, Lowe's, Costco, Sam's, wherever. You can't even get them. And I think more and more people are turning to solar and storage as an option on the residential side. Obviously, we're seeing more grid scale batteries as well, and maybe it's been more gradual and I'm just not as close to it. From my seat, it seems like batteries are exploding. I think it's part of that same equation. So if you can provide savings and resiliency, like that's a really good long-term value prop to the customer.
Yeah, definitely. I think a lot of people we're seeing storage being implemented in residential because of what you're talking about, being energy independent and reliability, right? To have that power available. And then the other thing too is then you could get, obviously, if you have solar, it just makes sense to have storage and then an EV as well. But I'm hearing like, especially in Florida, there's a lot of solar plus storage coming a lot. I'm trying to remember who told me. And then just kind of going back to some of the things that you talked about, like there was an executive order that came out a few days after July 4th. It was actually July 7th, which was going to provide more guidance on the safe harboring. And they technically have 45 days to provide guidance. So sometime next week, we'll have a good idea about that. Why this is important, because people in the industry normally do 5% of the solar panel to basically take advantage of that. And supposedly that could be changed. And then obviously you mentioned a lot, Nate, about FIAC, foreign entities of concern outside of 2025. We're trying to get guidance on what the FIAC is. And I'm hearing that it might take them longer because out
Yeah.
2025,
It took years to get guidance on the IRA. So I'll be shocked if it comes out anytime soon. And this is very complex and nuanced.
Oh, by the way, what I'm hearing is there's a lot of debate about this within specifically the FIAC, and really FIAC is related, as you said before, on China. So it'll be interesting to see what happens with that. One of the things too with the investment tax credit is storage. You get the full 30% ITC till 2033. So I believe everything in the future is going to be just standalone storage or solar plus storage. And I think you made the great point. I think everyone was fine with lowering the investment tax credit if it was more phased, right? This is a very sort of rapid way, especially when you talk about Section 25D, which relates to the residential ITC. So it's interesting because we're going to have to adjust. Obviously, there's been a lot of pain already, right? We're seeing large companies go out of business. There's a lot of layoffs. There's a lot of companies holding off on hiring just because of all the uncertainty. It's tough to also get money too, right? For projects. People are only focused on acquiring, like at least when you talk about commercial, industrial, and utility, like NTP ready projects. So, and obviously everyone's racing to get everything qualified, so it's interesting times for sure. And then obviously I'm going back to all the things that you're talking about. I mean, there's so many different pieces to it. The Inflation Reduction Act, which had obviously all these great incentives, that was 2022, August of 2022. And then everyone was excited at RE Plus that year. Maybe it was still SPI at that time. No, you're right. It is RE Plus. Anaheim, and then obviously now 3 years later, I'm hearing, by the way, like less people are going to be attending RE Plus. There's been people pulling out, companies pulling out from exhibiting as well.
Do you think that's because a lot of them are foreign? I'm going to segue this before you answer that. So you hit it right on the head. And I'm not a supply chain expert, to be clear. I was talking to somebody the other day who's a close friend, who's been in the industry longer than I have, who is a supply chain expert. And he wasn't as concerned about this as I am. Concern's not the right word. He thought maybe it wasn't going to be as big a problem as I think it is. And he would have the data behind it. I'd say my thesis is more anecdotal. But there's two things I want to point out. One, I'm sure there are. I can't name a battery manufacturer that will meet FIAC requirements, because whether it's the lithium is owned by the Chinese, like the mine, or the company's owned by the Chinese, or they're being built in China, sent here and repackaged. I know there's other sources of lithium. People brought this up to me, but and I could be wrong. I'm okay with that. Like somewhere along the line as a society, everyone's scared to be wrong. I'm not a politician, so I'm allowed to be wrong. But I just can't think of any. So what I see is there's going to be at some point a choke point in the supply chain. You can't just spin up this manufacturing like this to meet not only fiat to get the ITC, but then there's the domestic content component that gets you the extra 10%. Next year, it's 50% of the materials of the project have to be made domestically to qualify. And I just think there's going to be a mad rush to buy these. And I don't know there's enough non-China or certainly not enough made in the US equipment in totality to be able to get the tax credit. So what's going to happen is, again, this just seems like simple supply and demand economics. I know there's more factors involved, but from my vantage point, again, I would say that you're going to have the price of fiat compliant whenever the guidance comes out and domestic content, we're already seeing go up. I'm seeing it go up a lot, like 20 cents a watt for panels for domestic content. And at some point, there's a break point. I think you might have touched on this earlier, where you kind of glaze by it. There's going to be a break point next year where people are doing the math going, I can pay an extra 60 cents for panels and inverters to get the tax credit, or I can just buy lower cost equipment from China and just, you know what, forget the tax credit altogether. It's the reality of it, right? At some point, if you don't have the supply chain to meet all the requirements, the cost is going to settle somewhere around where the break point is, and people are going to have to make a decision. Again, it's a gross generalization, but it's one thing I'm tracking. The other thing, I guess I'll say, we can address both points, but you kind of also alluded to, and I was talking to the co-founder of Sonova, who now runs a resi installer, about this. And my crystal ball is telling me that finance is going to be constrained. You talked about less people investing, and I'm sure that's true. And in commercial, I mean, I don't know. You tell me, that's more your area of expertise, but it seems like there's been kind of a bull rush to finance those, but now it's kind of simmering. In resi, there's not a lot of TPO options. SunPower and Sonova went out of business, the two publicly traded ones. There are a handful out there. I think by far in residential, a TPO like LightReach is by far the largest. I would guess we should check with our buddy Chris over at Ohm Analytics, but shout out to Ohm. But I just see a constraint in financing. So loans are going to lose the tax credit because the individual homeowner can't get it. And then there's all these other things going on with the loan space for those unfamiliar with both GoodLeap recently and Mosaic. So those companies are in trouble. And then when I look at the lease side, there are a few, I'm not going to go name them all, but some of those are struggling. The ones that are just stood up or exist, I could see a world where there's just a crunch in financing. And some of these financiers also, if there's less competition, then you're not as incentivized to get creative, open the FICO box, right? And allow lower FICOs. You were seeing the reverse. People are increasing the FICO rate, which I don't think at a certain level really has a lot to do with the customer's propensity to pay. I'm sure people would argue against that, but I could make a pretty solid argument that if you're saving money, you're going to pay solar prior to paying the utility. It just doesn't make any sense. So I think we're going to have two headwinds in the near term for resi. And the offset of that is, again, rising energy costs. But I think the supply chain, we'll see. Maybe I'm wrong. I hope I'm wrong. But batteries in particular, and sure, the tax credit can be good through 2033. But if you can't find a battery that's compliant, then it's sort of irrelevant. And then, yeah, I think the finance, it's going to be harder and harder to find financing for your projects. And I think the financiers that are around that are gaining market share can continue to be picky if they want as to who they allow, which is ultimately probably good for the industry in some ways, certainly increases the quality, but I see both those as headwinds in the resi space.
Yeah, I mean, that's so interesting if you think about it, because obviously we're waiting for the safe harboring rules, the FIAC stuff. And I think right now, like we could assemble panels here in the US, which we're doing, but it's really the raw material and then taking it to the point of actually construction is pretty much done majorly in China. And then batteries in itself, right now it's all coming from China. So I'm curious to see, like, obviously what they're going to come up with the fiat and then obviously the safe harboring. All this makes everything, as you know, so more complex, right? And then financiers, they take a while, right, to get up to speed, especially if it's new. They have to work with obviously their principals, with lawyers, experts, and so it'll be interesting because it'll take a certain period of time. And I think the problem is like the expectation right now, or people think, is it's too quick than what could reasonably happen in the US. So it's interesting because Wood Mackenzie came out with a report that basically showed that it's more expensive actually to be fiat compliant on solar, specifically related to the modules, than on a non-ITC system cost. So that it's so much higher. It's actually almost double the cost.
It's exactly what I was saying.
Actually, the chart they have online actually about it.
I posted something about from WoodMac too. I wish I could give the author credit. I'm trying to remember. It's on my LinkedIn, but
Person who actually from Wood Mackenzie who did this analysis, his name is Sagar Chopra, Solar 2.0, Solar's next chapter under the Trump administration. They did this research and basically a new cost curve for solar projects in a changing supply chain, and then comparing a fiat compliant one to a non-ITC or non-fiat, right? Essentially.
again, I'm pretty sure I think we have already talked about this article, but I did put it on LinkedIn if somebody wants to go look at my posts. I think it was Wood Mackenzie. They're still projecting long term like a huge growth in general. And I agree with for all the reasons we just talked about. I think that's true. I just think we're gonna have some headwinds, some uncertainty here, but when do we not? Honestly, I mean, there's always something going on in solar.
So yeah, like I mean, I think there's a couple points, right? Solar is the fastest and cheapest form of electricity that could come online, right? It also allows in the residential sector, gives them energy independence. We're getting more climate, right, related storms. So
Mhm.
this helps, right? And then obviously we're going to have more blackouts and brownouts going forward in the future. So if you're able to obviously have solar and storage in your residential home, like that's why you're seeing such a high increase. They're saying specifically in Florida and Texas, we're seeing a lot of solar plus storage.
Yeah,
And
that's our two biggest markets.
it's related to, obviously resiliency and independence from the grid. And wouldn't you want to be independent from the grid? So,
Yeah, especially with electric prices I've been doing. And yeah, I did my most recent post is the one we were just talking about. It was reported in PV Tech, and WoodMac is projecting 150 gigawatts of residential solar capacity to be added by 2050, which is a long horizon, but the addressable market they're saying is enough to power 70 million homes. And it's driven 100% by savings, right? And in reality, increasing electric rates. So I still think there's a lot of hope. And I also think that the markets in the industry will respond with new innovative products. Like one of the things that, I'm really passionate about, and I've been talking about this for more than 5 years, for sure, probably longer, is a prepaid lease. So it's perfect right now because if you have individual homeowner who wants to own the system, but they can't take the depreciation or the federal investment tax credit or any of the adders to the tax credit for domestic content or energy community, so on and so forth, it doesn't make a whole lot of sense for them to take out a loan and forego that. I mean, honestly, some of the tax benefits, you could do the math yourself. 30%, then use domestic content, that's 40% federal investment tax credit. And then on top of that, you have whatever your depreciation basis is times your tax rate, and you can get all that back in year one. I mean, that's a big tax incentive that the customer doesn't have access to. So what we're structuring is through our technology is we have tax equity that'll step in, and instead of buying tax credits, which you can do now, they're transferable since the IRA, you can own the system for a pool of residential customers. It's more nuanced in this, so I'm going to talk very generally and not get in the weeds, but it's a mini partnership flip, as those in the industry are aware of, sort of, where it kind of, again, I'm grossly simplifying this to try and make it digestible, but it flips to the customer in year 6 once the tax benefits are out. So what does that mean? So instead of paying $50,000 for the system, the residential customer, they can get a 30% discount. They get a loan for that remainder, so they pay 70%, and then somebody else owns it for the first 5 years, and then they end up getting ownership at day one of year 6 when the tax benefits are gone. And it's a really efficient way to do solar. So I think the markets are going to react. I think I've talked to all of the major loan providers that are trying to figure this out, because they know if you're competing against a lease who can take the depreciation and tax benefits, you're just not going to be competitive in a monthly payment with a loan without those tax benefits. So I think the solution is clear here. You have somebody else own it to take those benefits. The customer gets a discount day one, and then they get to own the system at the end. And what I'm finding, and I've modeled this every which way, as you can imagine, I have some pretty complex spreadsheets. It beats a lease with an escalator. So you now have a loan that is fixed for the term, and you have a lower payment than a lease that's going to escalate every month for 25 years. So it's a home run. And then on the tax equity side, it's very low risk. And put numbers to it just to give the audience some concept of what we're talking about. If you're buying tax credits, say you're buying them in resi, I don't know, let's be conservative, 85 cents on the dollar. So that means you could spend 850 grand and you get $1 million of tax credits. It's not the greatest return in the world. You get tax insurance, don't have to worry about recapture. In this model, though, you could put in 850 grand to own assets without any billing or collections risk, because the customer's getting a loan for the prepayment of the power, and you don't have any of the credit risk, obviously. But you're going to put in 850 grand and you're going to get, 1.9 million in tax out. It's such a better investment. And all of these things have a 25-year warranty, all the inverters, panels, there's no moving parts. It's very, very low risk. And companies like ours, I think we're unique in this way, but we built a system where we're already reviewing these at a very detailed level to make sure that these assets are bankable. So now you have bankable long-term assets that you're, as tax equity, you just need it to perform that first 5 years. You're getting a tremendous return back. If you're filing quarterly, you have a 45-day carry period on average. It's insane. So Benoy, you give me $1 tax, I'm going to give you $2.05 back, right? And you have to carry it on average for 45 days. Fantastic deal. And you don't have to worry about this thing long term. We'll wrap it. We'll make sure that not only does it have 25-year warranty, but if we have to roll a truck, we'll have our install partner cover that as part of the cost of the job. It's just a win-win. It's better for the consumer. It's efficient in how you're monetizing the tax. I think it's very de-risked for tax equity. I'm not saying, again, this is super high level. There are intricacies and complexities. I've worked through these with tax counsel. I'm obviously not a tax attorney or CPA. I always have to say that this isn't tax advice. But at the end of the day, as far as I can tell, and I consider myself a finance expert in residential solar, this is the best product that exists in the next 12 months for sure. And then, like you said, it's going to get really interesting. We've been talking about what is the real cost of fiat compliant to get the tax credit. In 12 months from now, we might say, you know what? It's just cheaper to not worry about fiat or safe harbor and just forgo the tax credit. But in this model, you can still monetize the depreciation. And that's not nothing. The depreciation is calculated in solar for those nerds out there. It's basically, you take the cost basis of the asset, you subtract half of the ITC, that's your depreciation basis. You multiply that by your tax rate. So if you're in a 37% tax rate, which, let's face it, if you're going to own millions of dollars of solar, you probably are, or you're a corporation, you're at 21%. But if you're at 37%, that's higher than the ITC. And if there's no ITC, then your cost basis is just the cost basis. You don't have to subtract half of the ITC. So you still can get 37% or 21% back year one in 100% bonus depreciation. So from what I can tell, this model still holds water after the ITC, and in a very competitive environment where people are going to be fighting over pennies, right? As everything gets tighter, not only, you're going to have increasing supply costs, you're going to have to lower your CAC, sales commissions are going to get compressed to make up for this lack of ITC. But if I can still offer a 15% discount to the customer, or 10% or 5%, and no one else can do that, that's kind of a big deal when your average ticket of a system is probably around $40,000, somewhere in that neighborhood. That's still a really nice discount. And the whoever's going to own the system long term, his house it's on, they don't have to worry about any maintenance for the first 5 years. So you can pitch it that way as well. There's no moving parts, like I said. So if something's gonna go wrong, it's usually in the first month when you're commissioning the system. Once it's up and running, there's not a whole lot that can happen outside of negligence or, acts of God, we'll call it. Even then, these things usually are built to survive. So I think you'll see more innovative products. I'll be curious to see what happens in the CNI space. I'm actually kind of curious. I know a lot of guys that are really big in the space, but there are some people that are investors in our company that are really big in the space. So I'm super curious to continue conversations with them. I think right now a lot of people are relying on that side. You can tell me because you're closer than I am to it, but I think a lot of them are banking on safe harbor, and I'm not as bullish on safe harbor as we've mentioned multiple times, just because I don't know what's going to happen with this administration, as nobody does.
Well,
this is what I hope I'm wrong on, but I don't know. He's made it very clear, he being President Trump, that he wants to, it's not a loophole. He wants to not allow safe harbor or make it more difficult, change the commencement construction rules, all of these things. So to me, that's a pretty big flashing red signal that we can expect some changes down the line that are they're not going to be favorable, be more definitive it's not going to be favorable for solar developers. So all that being said, I think that we need the power. We're going to continue to see more and more solar on the grid. You might have a little decline here in the short term, but long term, you're going to continue to see solar deployments up and to the right, because frankly, there's nothing else that you can deploy quick enough to meet the demand. So it's really the only solution in my mind.
Yeah, definitely. And obviously, we all learned from the big, beautiful bill that any legislation coming from the executive branch is not going to be favorable. So, obviously, in a week, when we see the guidance on safe harboring, I'm sure everyone's expecting the worst. And it's crazy to me, honestly, Nate, that there are a lot of companies that are aggressively buying panels right now and stockpiling them, and they could get burned by that. And then we have had in the past where people have been aggressive on the safe harbor, but then the cost of the panels went down and then it went the other way, right? So it's a challenging situation. And, I'm really interested in, obviously, I think there's going to be people. One thing is a guarantee, like there's just so much innovation and there's going to be more innovation. And I'm really excited about your prepay lease product. I know you've spent, time explaining it. I'm interested in personally for myself, like interested in, learning about it and potentially investing in it as well. I know, Nate, you're going to be in RE Plus in a few weeks, and you're looking to meet potential investors, talk about that. And
Yeah, I mean, our tech platform is a few years old now. It's very mature. We're doing in our install network. Again, we're asset light, so we're working with installation partners across the US. But we're doing, tens of millions of dollars a month now of sales and installs. So we had to get the tech to a point where we could really scale. And I think now with the dust settling from the BBB, we are seeing a lot of high net worth individuals that want to come do these sort of bespoke funds to have that. I liken it to owning an apartment complex, and if it's in certain low income areas and others, there's all these tax breaks. I'm not going to pretend to know about that, but it's a very similar kind of thing. And I think we're getting more interest than ever in this structure. And there's a huge gap now in the lower FICO range. As I said, like the financiers, because there's less of them. And I think they want to have better portfolios. I'm doing air quotes. I know people can't see me because I don't know the FICO is super indicative of that. And I've talked about that on other podcasts, so I'm not going to revisit it. But at the end of the day, I think there's a need to have a product, a lease product, especially now that the ITC's gone, for that 600 to 660 FICO person who really wants $20 or $30 a month saving. It's meaningful to them. They know it's going to grow over time as energy rates go up, and they're going to pay their bill, because the alternative is you just remotely shut off the system and they got to go back to the utility. And I think we've proven that. We're going to continue to prove it. And I'm okay just growing one brick at a time. But ultimately, if somebody's interested in tax equity in particular, wants to learn more about this prepaid lease, I would love to talk to you at RE Plus. I have major solar loan companies that are ready to provide the loan to the consumer for the prepayment of power. I think we worked out how to do the UCC and all of that. And, at this point, we're just looking for tax equity. We have all the tech built of all the contracts vetted through Solar Tax Council, people that are far smarter than I am. And right now, we're just missing that tax equity for those projects. Again, a lot of the funds I already had in the works are with people who want to own the asset long term. So they're okay with the billing and collections risk. And that's a great model too. It's still a great tax play to offset your tax, especially if you have passive tax or if you're active in solar or anything tangential to solar and your CPA says you can offset your tax with that. But I think there's a real value in a better product that better's relative. If you don't want to own the asset long term, if you just want to be straight tax equity, I think you can get more juice out of it in this prepaid lease model and even a little bit less risk. You just don't end up owning the asset long term, which again, a lot of people don't want to, right? So they like the idea of, I just come in, I'm the tax, I'm helping people get solar. I get a great return back because the ITC and bonus depreciation, that person gets a deal that's better than anything else that exists for residential. So that's awesome. And then they end up owning it in year 6. And if not, like I said, we'll step in or the installer will step in and we'll own it so that the tax equity doesn't have long-term liabilities. So I think we have a great structure. It's something that 100% works, that we could sell a lot of. There's a huge demand for it. And I'm starting to shift gears now to, all right, I got the loan lined up. I got all the contracts ready. Who wants to come in with tax equity? And I think we could deploy literally any amount of tax. I mean, I would take anything. We can pilot it with 10, 15 million, or we can just jump in with 50. I think either way, you're going to see all the loan companies are going to have to figure something out here because the tax credit's ending really soon because the project has to be built for the individual homeowner to get tax credit by the end of this year. So as of like September, loans are going to, I think, start to tank and you're going to see more and more just TPO in general, whether it's a prepaid fashion or traditional lease or PPA. You're going to see more of that, and certainly in residential solar. That's for sure. I don't see any way around it. Because if you just stick with loans and you're less competitive, your sales teams are going to get poached, right? They're going to go to leases that are paying higher commissions, and it's always a race to have the better mousetrap. And I know that we have the best tech for sure, and we have the expertise in this space, particularly around leases, where we can help do the reviews, the QA, QC, make sure these things are good, bankable assets, which I think is going to be really important in this prepaid model for tax equity to get comfortable. So from that standpoint, like I said, if something here resonates with you or you're just a high net worth person and you want to throw your hat in the ring, we've done a lot of those funds as well. Really, they're portfolios, I should say. They're not funds, but we do a lot of these portfolios of projects. So if you're around and you have tax equity and you want to learn more, please hit me up. I'm sure my name will be in the notes and you can find me there, find me on LinkedIn. And I'd love to have a chat with you out in Vegas in a few weeks.
Yeah, definitely. That's exciting. I'm excited for you, and it's amazing to see the progress that SunRaise Capital and technology has had in a very short period of time. Is there anything else that we should talk about regarding residential solar, the outlook for this year and next year? I feel like we've covered the major things.
Yeah, I mean, well, otherwise this will be a 4-hour podcast. If you
For
want to,
sure. By the way, I said good twice. I don't know if you heard,
there's
but
my plaque right there. Yeah, I heard.
obviously, like it's something that we've spoken about on previous podcasts. Jocko Willick, we're both, big fans of his content, and he always says good, like obviously it's a very challenging time for the solar industry. We're all adapting real time and every single day, and obviously, make us a lot stronger in the industry, a lot stronger, I think, going forward. It's going to be painful, and it has been painful, but I think the strong, obviously will survive and will be able to be more creative too, especially without the ITC. It'll allow us to do things, I think.
I would take it a step further and say the strong aren't going to survive. They're going to thrive. People that make it out of the next year or two. That's what I always say. I think it's got to hunker down, refine your business model. And, business is a lot of luck in capitalizing on opportunity. And I think for us being one of the first platforms, I think we are the first, the only one I could think of that built everything specifically around a lease, and then to have, lease TPO, again, I use those interchangeably, to build everything around third party ownership and then have loans kind of get this gut punch is a little serendipitous for us. So I think again, that's where preparation meets opportunity, as they say. So being able to take advantage of that, I think for us in the short term is really good. And we have the expertise and know how to deploy all these different financial products and configure them different ways. And we still have great relationships with institutional portfolios that we help fill as well. Lightreach is a big partner of ours, and I think they have to be one of the largest lease providers right now in the US. I would think they have a lot of market share, and they've been great. So continue to do that. I'm looking for things that supplement that, right? If they stop at 660 and people are looking for finance and people want solar, like, can we get the 600 to 660 FICOs? And it brings installers to our platform, right? And I think it's good for everyone. It's good for the consumer. It's good for the industry. And it's good for our partners, because if we have these other products that bring people to us, then they're going to also sell the larger funds as well, because ours are generally pretty quick cycle. If you get $10 million, we can easily do that in a month. That's no problem, right? Even if it's 10 million of tax and ends up being 15 million total fund size portfolio, we can deploy that very rapidly. So again, I think it's a good symbiotic relationship, kind of unique how we set up our platform for sure. I think sometimes it takes a second for people to get their head around it, but it's very intentional as well. I wanted to empower folks, built this to empower folks to be able to invest in solar. I'd love to get to a point where anyone can invest. Like, you could buy 1,000 units, $1,000 worth, and you have to hold it for 5 years like a bond, but you get the equivalent tax benefits, the proportional tax benefits, and the revenue from that. I mean, that's super complex. I would love to do that in the future. But in the near term, we set up our business so that installers could open up the FICO box to get more deals, to bring more sales dealers in, because they have a unique product where they can offset their tax if they're profitable. Instead of having it all go to these large tax equity funds, they can offset their own liability. Like you said, like, you'd be interested in doing it. And yeah, I mean, if you can get 100% return on your tax liability effectively, it's why not? It's might as well, as it make hay while the sun's shining.
Yeah, obviously these are very great points on, why looking into the product offering that you're offering is important. This has been an amazing interview. I really appreciate Nate making time out of your schedule. If our audience wants to learn more, reach out to you, like, what's the best way for them to do it, or to learn about SunRaise as well?
Yeah, it's always LinkedIn. I haven't updated our website in a while. We're more focused on deploying capital and expanding our partnership. I mean, you could certainly get a flavor for what we do on there, but it's not going to be the best source of information. I would just send me a note on LinkedIn or reach out to Benoy and he'll connect us. My email will be in the notes here. It's nate@sunraisecapital.com. So feel free to reach out to me directly, and met so many people on LinkedIn. It's just a great way to connect. So I usually push people that way. I think I've done a lot of business through LinkedIn. It's the only social media I do. So you can also follow me, and I post about a lot of these different thoughts and opinions, and just kind of be respectfully provocative on LinkedIn. Like, I don't post anything outlandish, but just, where are we supposed to get this power from? Like, oh, it's going to be gas. Okay. How fast is that going to come? Well, 8 years. All right. What are we going to do for the next 8 years? Going to recommission coal plants? I don't know. I don't see that, but I'm sure people are working on it. So anyway, yeah, if you could reach out to me directly on LinkedIn. Love to connect. And if you're going to, like I said, if you're going out to Vegas here at RE Plus in September and you have tax equity and you want to talk, by all means, please reach out. I'd love to have that conversation.
Yeah, that's amazing. I appreciate you again, and thank you. And I look forward to seeing you in person at Plus. I always also too enjoy when we do our recap of RE Plus.
Yeah.
The great thing about that conference is obviously it's the largest solar conference in the US. I don't know how many people they're hoping this year are going to come. It's probably going to be between 30 to 40,000 people. But I'm able to talk to so many people in a very short period of time. So I really learn a lot because you're able to see what people are thinking in the industry. And Obviously, looking forward to that and looking forward to seeing you in person. We'll obviously have your contact information in the notes of the podcast. Reach out to Nate if you're interested in potentially investing in, their product. And thank you again, as always.
Yeah, appreciate it. It's always a blast. Thanks, Benoy.
Thanks for listening to the Solar Maverick Podcast. The Solar Maverick Podcast is brought to you by Reneu Energy. We're a solar development and consulting firm. If you believe that this podcast is adding value to you, please give us a 5-star review and share with those that you think could benefit from this information. Please email all questions, suggestions, and feedback to info@reneuenergy.com. That's info@reneuenergy.com. The Solar Maverick Podcast is produced by Podcast Laundry and executive produced by Benoy Thanjan and Kevin Y. Brown.